Hello traders, and welcome to part 3 of reading sentiment. I'm doing today's video because this was the most suggested video that I had on my Patreon. For those who don't know, I have a Patreon where members can suggest a video and vote upon the video that they want to see every Friday. So I post every Monday and Friday, with Monday being my video that I choose, and then Friday being the video that the viewers choose. And it was reading sentiment part 3. So here's what we're going to do today. To start, I'm going to talk about a quick little recap of the past 2 videos that I made in this series. Then we're going to look at a healthy versus an unhealthy trend with looking at buy and sell volume. And then I'm going to show you guys some strategies that you can use to trade this. And finally, I'm going to have a test where I'm going to show you guys examples and ask you guys if you would rather buy or sell the asset. Okay, so to start with this, the first video that I made looked at overbought and oversold levels and looked at how to trade off of position spikes. My second video that I made looked at 3-stage theory, which is looking at the market mistakes that retail traders make with a trend. So if the price is moving upward, we have buyer positions moving downward, seller positions moving upward. And then eventually we get a spike in buyer positions at a market top. And then the market goes down. All right, so now let's get into it. What volume will look like in a healthy versus unhealthy trend. So again, I have my handy dandy bfxdata.com. And in the past, we've looked at this right here, which is margin trading positions for Bitcoin. But now what we're going to do is scroll down to here and look at buy and sell volume versus the BTC USD price. So I have the 14-day. And basically what you need to know about this is the Bitcoin price right here. This is buy volume, and then this is sell volume in red, buy volume in green, which corresponds to the price in real time. Okay, so as you might be wondering, well, what does buy and sell volume look like in a healthy trend, and what does it look like in an unhealthy trend? I'm going to go to the 30-day. Typically what you're going to see in a healthy trend, in a healthy uptrend, may I say, you should see heavy buy volume at market bottoms and weak buy volume at market tops. This shows that there's a lot of propulsion with buyer volume near the bottom to have it go higher, and not you haven't reached an overbought point where you have a spike in volume at a market top. If you do see a spike in buy volume at a market top after a long uptrend, typically that's going to be a reversal. So basically, the main strategy that we're going to use today with looking at buy and sell volume is to look at volume spikes. And when we see this volume spike, we want to trade with it instead of against it, because this is how we can get into an uptrend or a downtrend at the earliest point. So what I'm going to do here is I'm going to hit this. So we're just looking at buy volume. I like to do this just to isolate one variable. So let's do that. So what you're looking at here is just buy volume. And what you need to look at in a trend is 3 things for each volume. You need to look at what is the volume at a market bottom, what is the volume at a market top, and what is the volume for the continuation. And I'm going to show you guys those 3 things and what they mean. So we have an uptrend here, as you can see, and I could spot on this graph, I could spot all 3. I could spot an instance where we have a market top right here. You see this overbought. We have a spike in buyer volume right here with a long uptrend. This is a really bad sign. This is buyer volume at a market top spike. Prices go down. Went down. And then we have a downtrend with a market bottom and a very high spike in buying volume here. Market goes up. Then I also see some continuation here. We have a newly formed uptrend. So we know that if we see a spike in volume, that's probably not going to be a market top. We know it's probably just the fuel for the uptrend. And we see right here, we see a spike in volume with a corresponding spike in price. When you're looking at an uptrend, you need to see very high volume accompany a very swift change in price. And when you don't see that, that's a very bad sign for the uptrend. It's a horrible sign, because that shows if the price isn't moving much, but there are a lot of people jumping in on a trend, that's probably overbought. You can see that right here. We have price barely moves upward, but we have 100 Bitcoin being bought in a short period of time. So that would be a very bad sign. But look here, we have around 60 Bitcoin being bought, but price goes from 57.87 all the way up to 59.84. This is continuation volume of the trend. This is an overbought, and then right here we have great volume that will prop up the trend for an uptrend. So those are the three kinds of volume we want to look for buy volume. Now to look more at the strategy, let's look at sell volume. So sell volume is just going to be up here, and we have buy volume. Having strong buy volume at market bottoms is good, but sell volume is going to be the opposite. If you see strong sell volume at market tops, that's a sign that the market's about to change. And if you see very strong volume at market bottoms, that's a very bad sign that the market's probably about to go up. So let's look here for, again, all three examples of spikes in sell volume. So I kind of just showed it before, but a very healthy spike in sell volume right here. We have an uptrend, we have a market top, and we have very high sell volume at the beginning of a downtrend right here. And the market goes down. And then with this downtrend, we see continuation selling right here with this right here. I call this continuation selling as well because we have support right here, and we can see that we blast right through support. So we break out, also known as a breakdown, and price shoots below the support level with very high bearish volume. That is not a market bottom. That is a downtrend. But speaking of a market bottom, right here, we have a spike in selling volume, but the price doesn't really move much. We can see here. The price does shoot down here, but then it stops moving and it immediately goes upward. That is what a market bottom looks like. And this is exactly where you should be buying. Spike and sell volume, where the price instead makes a V formation and moves upward, even after all these Bitcoin are sold. This is a sign that many institutions and larger retail traders are getting into the market at the expense of many retail traders who are dumping their Bitcoin. And like I've said in many videos before, you do not want to be doing what retail traders do. You need to be doing what institutions do. The smart money versus the dumb money. And the dumb money was doing this, whereas the smart money was doing this. So that is just three examples of what to look out for sell volume. So we've gone over both buy and sell volume, what's healthy and what's not healthy. Now let's pair them together for the final part of the strategy. So when we pair them together, what we want to see here is with a spike in volume, you need to see at a market bottom higher buy volume than sell volume. So let's look here. We have a market bottom, we have a spike in both sell and buy volume, but we have much higher buy volume right here than we do sell volume at this market bottom after a downtrend. This is a very bullish sign. And if we look here, it's the opposite. We have a market top with resistance right here, and we have higher sell volume than buy volume. We have 155 sell and 100 Bitcoin being bought. So that's 2 to 3. 3 Bitcoin being sold for every 2 being bought at a market top. That is very bearish. And we can continue to see that here. You can see that here as well, where we have, at this top right here, we have very high sell volume and not as much buy volume, and the market goes down and then began to consolidate here and might go down even more. So that's the final part of the strategy you want to look at. At a market bottom and a market top, you want to see, okay, so who has the upper hand here? And here you can see the bulls had the upper hand. And here you can see that the bears had the upper hand. But I would always start with the strategy to look at just individual volume, because this paints a very clear picture of who's in control of the market. Okay, so we've gone over looking at buy and sell volume in the 3 different kinds of fashion: at market tops, at market bottoms, and as continuation. We've also put them paired together and seen how that impacts the market. Okay, so that is how you can easily trade using volume spikes. But what you might be wondering is how this works in conjunction with positions. And what I'm going to say is, for my next video, I'm going to show you guys exactly how you can pair position trading with volume trading. But for now, know that basically what we do is when we look at positions and trends in that, we want to see a buy. We have a bias, not a trigger. So this is telling me, for example, if I do this, then this is telling me, hey, so Bitcoin positions are Bitcoin long positions are falling. Maybe I could become long. Just very simple, not exactly true here, but rule of thumb. And then what I'm going to do is I'm not going to just buy right away. That would not be smart. I want to time the market. So what I'm going to do is wait for the market to reach a minima or a maxima, and then I'm going to wait for a volume spike. And then when I see this volume spike, something like this, immediately I'm going to think about getting into the market. So that's exactly what you want to do. You don't want to just look at one of these because they feed into each other. And if you want the full picture, you need to know how to trade both. So that's my little spiel on looking at positions and looking at volume as well. All right. So we have gone over buy and sell volume. Now let's go into examples. Okay, so first example here. Right here we have Bitcoin, and it looks like we have an uptrend. And I'm going to give you guys 5 seconds to tell me, is this bullish, is this bearish, or is this kind of neutral? And why? All right, 5 seconds starting now. All right, so I would call this very bearish. This looks like an overbought point. Just looking at buy volume, we have an uptrend, and then this looks quite unhealthy. It's kind of hard to see, but you do have a very quick fall off in price. So what this is telling me is that we had a mad rush of buyers right here in this uptrend, and we reached an overbought point. When we reached that overbought point, we then had a quick fall in price, which is showing a rejection at that level. And what this is going to do with the market is trap many long positions at this price right here. So the last thing this is telling me that's a little more complicated, but kind of cool, there are a lot of traders who are now locked into positions here, meaning that if price does go to that level again, I can expect a very rapid sell-off because all those traders that were losing are probably going to want to be break even when price goes back up. So that's one thing. So the answer would be bearish. And this market actually did fall. And you can see that fall right here. I made this graph to feed right into this graph. So the market fell immediately after a bit of consolidation because of an overbought point at around 77, I'd say 77.50 at the top. Okay, so now I have another example, and I want to know, is this bullish, is this bearish, or is this neutral, and why? 5 seconds. Yeah, so I would actually call this very bullish because we have a market bottom. We have a very high spike in buy volume at this market bottom, and the market does not respond by going down. The market instead responds by going up. And then we have this volume spike right here as the market's going up, right about right here. What this is telling me is that this is a continuation of the uptrend, that this was the initial just boost that the trend had at the bottom. And then what we need to see is that fuel coming into the market with very high buy volume at the market bottom. And we see that right here with the continuation volume. And the price moved upward, as you can see right here. So, no, pardon me. This is an earlier graph. But the price does move upward away from here. And this is right before we reached 12th of November. This is when we zoomed up to the 8,300 level for Bitcoin. Instigated right here at around the 5,600. All right, so now last example, again, we have a very stable market as the price is moving upward. Really not many spikes in sell volume, so we don't really want to do anything in this market. And then we have this. So my final question to you is, if you had a bull position in the market, what would you do when you see something like this occur? I'm going to give you guys 5 seconds. All right, so if I held a bull position and then I see a massive spike in sell volume at a market top, I'm out of the market. This really looks quite terrible. Reason being is we have a market top, we have a very high sell volume, market responds by going down. And then with this quick fall off in price, you can see right here, kind of like a snake, we have rapid sell volume down to here and very high sell volume. You can see the sliver right here. And this looks like continuation volume after a market top, which is telling me that price is very likely to shoot right down. And this was around November 8th. And I think, yeah, which also would have instigated this all the way down to here. So yeah, this is telling me just because of the continuation volume and also because of the market top that we have here that this market is bearish. I would sell. All right, so that is the end of this video. That is the third example that I have for my reading sentiment part 3. Just a few quick notes before I end this video with volume in a healthy trend versus unhealthy trend. Basically what you're looking at is respect of volume. What you want to ask yourself before you enter a trade, before you have bias in the market, is you need to say, is the price respecting buy volume or is the price respecting sell volume? And by respect, I mean when we see high volume, is price moving up or down? That's all. So if what you want to ask yourself, sorry, it's being glitchy. Oh. Let me go back to the 30-day. What you want to ask yourself is, when I see a spike in buy volume, what does the market do? And the answer is very obvious right here, where we have a spike in buy volume right there at that top. Price moves down from 7,565 all the way down to 7,239, around a $300 just decrease immediately. That is not, bull volume is not being respected. But look right here, where we have that rapid increase with a bull, with bull volume being respected. So that's just a quick rule of thumb that you can find with a bias of who's in control here. And then you can also use that for more current examples here. You can see that, oh, okay, so bull volume is being respected here, and you'd also want to check that against sell volume. Is sell volume being respected here? Which you can see it was not being respected here as price immediately moved upward, and it was being respected here at a market top because we had an immediate decrease in price. All right, so that's going to be it for my reading sentiment part 3. We've gone over examples. We've gone over how to trade it using bull volume spikes and also bear volume spikes. And we know what a healthy trend versus an unhealthy trend is going to look like when we see those spikes of volumes at certain price points. So yeah, that's going to be it for this video. If you have any questions, comments about sentiment, then feel free to leave them below. Thanks for watching.